Value Investing, a little book of stock market investing to turn you into an intelligent investor and create immense wealth. Written by Armani Murphy. Narrated by William Harvey Jr. Introduction. Personal notes from the author. Value investing has helped to change my life. Instead of being stuck in a dead-end job, it gave me focus and drive to make an independent living using the skills I'd learned. It will give you that financial freedom that everyone is looking for. On my journey to becoming a value investor, I made plenty of mistakes along the way. I put in the research, implemented strategies, and became much more disciplined and patient. This has given me a rich depth of knowledge of how to succeed in value investing and how to avoid failure. I have channeled my passion into this book to give you all the information you need. Read on for more. Chapter 1. What is value investing? Investing is a lot more than simply finding stocks that you like the look of and hoping that they do well. There are various strategies out there which contain a lot of analytics and research. As with any type of investment, it can also require gut instinct and some good luck. With value investing, a large part of it is being able to work out the intrinsic value of a stock option. That's the value that you're able to put on a potential investment after an analysis, which you can then compare to the current stock price. Whereas other investment strategies will be focused on a company that is fairly valued but will increase over time. Value investing is a strategy of finding companies that are undervalued and then predicting that they will get back to your view of their intrinsic value. For example, take a house that should be worth $100,000. Regular investors would buy that house for $100,000 and hope that it appreciates in value. Value investors instead will look for a similar house, but one that is on the market $75,000. They will then sell this house when it returns back to at least its intrinsic value of $100,000. In the housing market, a house could be undervalued for a few reasons, such as if it's being auctioned off. Stock prices can also be undervalued for a variety of reasons, such as market ignorance, overreacting to bad news, or simply being out of fashion. Doing your own research. There have been many famous value investors, with Warren Buffett being a great example. As these stocks have to be undervalued, it can take a lot of research, as the vast majority of stocks will be fairly priced. You have to find value where most people can't. A lot of naive investment is done by simply following other tips and investing in companies that are trendy rather than finding value in analytics. Value investors need to be highly independent, where you trust your own judgment rather than following trends. You can equate this to saving money when buying a phone, car, or TV, etc. There are those who will simply pay whatever the price is in their local store, whereas others will scout out.
Sample complete. Ready to continue?